A lot of CEOs operate where their job is to do all the stuff that nobody else on the team could do. And that's a problem, right? You end up doing all the shit, all the crap, all the stuff you didn't trust somebody to do or you didn't hire the right person for, instead of making sure you hire the right people so that your job can focus on, as he says, 3 things, but strategy and having the right people in place and casting the right vision and all those things.
Yeah. So you deal with a lot of, with Investor Phil, you have a ton of people. As a lender, you talk to a ton of people in that lens. But I would assume you talk to people on a much bigger lens just because you're dealing with all the problems, whereas Tim may be dealing with financial problems. What is the common issue most people are struggling with? Either now or just in general?
Let's talk about now first, because I think that's very relevant.
Yeah, I think, I don't know if there's one common issue, but some of the most common ones are can't get out of their own way as an entrepreneur, and it's hard.
What does that mean?
Well, just, like seemingly knowing what they need to do, but just can't get the decision. The decision might be made, but they hire somebody and the problem solved. It's easy for us sometimes to throw money at problems, so we throw money at it. I hired somebody, and it wasn't the right person, and then it just boomerangs back to you. So that's a pretty common thing as a real estate investor, especially the acquisitions people, kind of key people in your business, salespeople, is that if you don't have multiple people, as a small business, you often can't have you can't afford redundancy in your business. So you make a bad hire, and you do one of 2 things. Either it seems like the lesser of the evils to just keep that person there because I don't want to do that. I'll just let them keep running with it even though they're not good. Or they leave and it comes back to you. And so you get stuck in this situation where you very much have a job and not a business. You're still doing a lot of stuff. And so there's, I think you know who Trey Taylor is. Trey Taylor spoke recently at Investor Fuel, and he said, a lot of CEOs operate where their job is to do all the stuff that nobody else on the team could do. And that's a problem, right? You end up doing all the shit, all the crap, all the stuff you didn't trust somebody to do or you didn't hire the right person for, instead of making sure you hire the right people so that your job can focus on, as he says, 3 things, but strategy and having the right people in place and casting the right vision and all those things, right?
Yeah. You mentioned on one of our recent episodes talking about single point of failure. Right, and so at Ternus, now that we're past the 20 full-time employee number, as the president and a partner, one of my biggest concerns is what if something happens to one of the key people? What if, I'm 46, I'm high strung, I drink too much and all kinds of things. What if something happens to me? What if I stroke out, have a heart attack, or just I
didn't mean to laugh at you stroking out. The term stroke out.
I have a Mike Hambright midlife crisis and move to the ranch, right? The whole point is, who's number 2, right? And so you guys have met Robert. Robert's going to be number 2 because I believe he can carry out my vision.
That guy? I'm just kidding.
Yeah.
He did just tell me, I was like, what's your main role? And he's like, mainly cleaning up Tim's messes.
Right. Well, but then also I've taken it a step farther and I've told Brian, the VP of Sales, that he's going to have to designate a number 2. I've told Lacey, the VP of Ops, she has to designate a number 2. And the controller, the big problem there is that will become a single point of failure. She just left her last company. They had to hire 2 people to replace the job she was doing.
Yeah.
So I'm already now looking 3 to 6 months down the road that we have to get a staff accountant under the controller. As soon as she learns the job and I give her a chance to put her fingerprints on it, I've got to bring in a number 2 because this month we'll do 70-something loans. This time next year we'll be doing 300 or 400 loans a month. And if you're doing 300 or 400 a month and one person goes down that, like Mike said, is the only person that can do it,
right?
You have a single point of failure.
So when you're doing that, hey, I have $100 to pay out my entire staff, and I've already maxed that out, and then I grew the company to 120. Now are you going, oh shit, now I can hire $20 worth of more staff? Or because like if it takes like, so how are you stair stepping that? Or is it like, hey, we're just taking on debt and we're building out a big ass company and we're not worried about being profitable right now. We're worried about having a sustainable big ass company
This
that
is
we
the
can
case
exit.
for growth, right? Like, I think when we were coming up, the growth was, I can buy toys, I can just do whatever the hell I want. And so now, I think the way that I look at it now, with some years and some wisdom and some experiences and some mistakes, is like, the case for growing your business is not to get a Lambo or whatever. You can get all the toys you want, I don't care. But it's really to be able to buy back your time and invest more in your business. Because if you don't have a couple, and by the way, my businesses are not all like this for sure, but if you don't have a couple people that are there in case something happens to one of them, you do have a single point of failure. So this is back to your question a minute ago. There's a lot of real estate investors and a lot of entrepreneurs that have a single person, a single point of failure, and they keep getting pulled back in. The sales guy just quit. I got to be the sales guy now. This person is sick. I got to step in and do that, right? And as an entrepreneur, that's a job, right? And so you have to grow your business, and you just have to keep plowing your profit back into the business to grow it to a point to where it's just more stable and it doesn't require you anymore.
This is why I'm such a huge fan of outsourcing for real estate investors. So I think if you don't have the budget, maybe instead of hiring a bookkeeper, you should hire an accounting company, right? Because then Mike's accounting, you don't know you have that business, but you do now, may cost an extra $500 or $1,000 a month, but I've hired Mike's company, not Mike.
Right.
So if Susie, who works for Mike, goes down, it's Mike's problem to do my books, not mine, right? I think a lot of more investors should hire virtual assistant companies versus trying to go cheap and save $1 or $2 an hour and recruit some VA in the Philippines that they have to manage
Directly, yeah.
and there's no redundancy where
Right.
if that person gets COVID, all of a sudden,
You got to go find somebody else and train them yourself. and
yeah.
everything.
So I think, and I also have to make this point because this is not some sort of like I was born with divine wisdom. This is the mistake I've made at so many companies.
Yeah.
At this company, Ternus, I spent a year planning it. And I've had the dates that people would be hired on a chart. And that's a variable chart. And so now the hiring plan was get to 5 loans per month, where I was the loan officer, the processor, the underwriter, the closer, the accountant. I did it all. And once I got to 5 loans, we started hiring. And once I got to 10 loans a month, 2 months in a row, the next leg of hiring began. Once I got to 20 loans a month, 2 months in a row, the next leg of hiring began. The next stage is 50 a month, 2 months in a row, which should happen this month. And then we have to immediately staff for 100 loans a month. And here's why. It takes 30 to 90 days. It takes 30 days for someone to be at 33% efficiency. It takes them 90 days to be fully trained to handle the pipeline you expect them to be able to handle. 90 days from now, I'll be at 100 loans a month. Like if I hit my 50, and if I don't hire them now, I will be understaffed when I achieve it. And now I'm in my own way because I can't continue growing. Now we have to pull all the way back so that we can keep up.
It's interesting that you brought up about how you spent a full year planning. Because I think as entrepreneurs, at least I won't speak for all entrepreneurs, but I think for me specifically, it's always been kind of a badge of honor that like, I'm gonna leap first, jump off the cliff, figure it out on the way down.
My first 16 companies were that way.
Right, and then it's just like, no parachute, no wings, but I'll build it. And it's funny you say that because I literally was just in this thing last week, and one of the things that we went through was it was a 3-hour lecture on the importance of pausing and planning. And it was done through like this childish game, which we all felt stupid doing it. But then it was like, aha, if we would just waited 4 turns before doing the thing, you would have won the game.
Well, check this out.
But let me just bookend it. The whole thing was pause, take mentorship, have somebody coach you, to have a plan in action, and then you can succeed. So that's really cool that you took a year to plan.
You would be amazed. I'm going to toss this is actually a question for Mike. How many of your members, when the wholesale market kind of got cut off in late 21, early 22, all of a sudden decided, well, I'll just start flipping?
Yeah, a bunch.
And then how many of them ran out of money within 4 months?
Probably a bunch.
Because they didn't know how to plan their cash conversion cycle. They didn't know how to look at a cash flow calendar. They just thought, I still need to make 20 grand per deal. I'll just flip. They don't understand. I talked to a friend of ours, Phil, in Buffalo. They don't understand the duration effect of taking on inventory. Because when you're wholesaling, it's unit in, unit out, unit in, unit out, unit in, unit out. When you're flipping, it's unit in, 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 unit out. It's 9 to 12 weeks, best case.
Yeah.
And if you're still buying at that same clip, you've actually taken a machine that maybe used to be able to do 2 a month, and you've gone from most likely 8 or 9 in inventory to 30. And the debt service and the carry cost and the overages crushed a lot of amazing operators in 22 and 23.
Yeah, and the risk. You own the inventory now, right? Versus assigning it. So yeah. Yeah, back to your comment a minute ago. I think in our industry is notorious for having this badge of honor for being in the hustle. And I've talked about this many times in the past. Like, there's no honor in the hustle. Hustle needs to be a season, not like your strategy, right? Because you clearly have a job if all you do is hustle. And if you can't figure out how to get beyond that, all you're ever going to have is a job.